Today we're diving deep into a blockbuster deal that has reshaped the AI cloud landscape. Microsoft has just signed a staggering $19.4 billion agreement with Nebius, an emerging cloud infrastructure firm, marking one of the largest private cloud partnerships in history. Investors reacted immediately. Nebius's stock surged, pushing its valuation to $28 billion, which translates to over 100 times price-to-sales ratio, an astronomical figure for a cloud computing startup. This deal is emblematic of a broader shift in the AI sector. Companies are increasingly outsourcing large-scale computation to specialized providers rather than relying solely on internal data centers. With the explosion of AI models, from large language models like ChatGPT to multi-modal AI systems, the demand for compute power has outpaced traditional in-house capacities. Microsoft's strategy, as we'll explore today, leverages Nebius's infrastructure to accelerate AI development, improve service delivery, and provide financial and operational flexibility. Beyond the headline numbers, this partnership offers insight into the emerging ecosystem of what we might call NeoClouds, dedicated cloud providers optimized for AI workloads. Firms like Nebius, CoreWeave, Nscale, and Lambda are forming a new tier of the cloud industry, catering specifically to companies facing the unique computational demands of modern AI. We'll break down why Microsoft is embracing this strategy, how it affects the competitive landscape, and what this means for investors, AI developers, and the tech sector as a whole. On September 29, 2025, Microsoft formally announced its $19.4 billion agreement with Nebius, an emerging but highly specialized cloud computing firm. This deal immediately caught the attention of investors and analysts alike, as it represents one of the largest single-company cloud contracts ever signed. For Nebius, this was a transformative moment. The company's stock skyrocketed in the hours following the announcement, with its market capitalization now hovering around $28 billion. When measured against its revenue, this translates to an eye-popping price-to-sales ratio exceeding 100 times, signaling tremendous market confidence in the company's growth potential. So, what exactly is Nebius bringing to the table that justifies this valuation? At its core, Nebius is a specialized provider of large-scale compute infrastructure, designed explicitly to handle the demands of modern AI workloads. While traditional cloud providers, including Amazon Web Services, Google Cloud, and Microsoft's own Azure, serve a broad set of enterprise needs, Nebius focuses primarily on AI model training, inference, and the operational scaling of massive neural networks. This focus allows the firm to optimize hardware, networking, and storage in ways that conventional clouds often cannot. Microsoft's AI ambitions are well documented. With products like Azure OpenAI Service, GitHub Copilot, and Bing AI, the company is pushing AI to the forefront of its business model. But building, maintaining, and scaling internal data centers capable of supporting tens of thousands of GPUs or specialized accelerators is incredibly capital-intensive. By partnering with Nebius, Microsoft gains immediate access to vast amounts of compute without the lead time and upfront costs of new infrastructure. In essence, it's a move that allows them to balance speed, cost, and operational efficiency. Analysts quickly frame this as a strategic maneuver to address Microsoft's AI data center crunch. The sheer scale of modern AI models is staggering. Training a top-tier large language model can consume thousands of GPUs and millions of dollars in electricity and maintenance costs. Nebius, CoreWeave, Nscale, and Lambda collectively form a new ecosystem of AI-specialized clouds, which companies like Microsoft are now leveraging to complement their own internal capacity. This hybrid approach ensures that Microsoft can continue delivering AI products at global scale while optimizing its capital expenditures. Moreover, Nebius isn't just renting out hardware. It's providing end-to-end operational support for AI workloads, including optimized pipelines for training, distributed computing frameworks, and low-latency inference clusters. This capability is crucial, especially for real-time AI applications like Bing AI and GitHub Copilot, where performance and uptime directly influence user experience and adoption. This deal also signals a broader market trend. Outsourcing high-end AI compute to specialized providers is now mainstream. It represents a paradigm shift in the cloud sector, where the differentiation is no longer just about generic storage or virtual machines, but about AI-optimized infrastructure, seamless integration with software stacks, and operational agility. Modern AI workloads are not like traditional enterprise applications. Training state-of-the-art models demands massive parallel processing, high bandwidth memory, and advanced networking architectures to support inter-GPU communication. Microsoft, despite being one of the largest cloud providers globally, faces a strategic challenge. Its internal infrastructure cannot scale fast enough to meet AI demand, especially as the adoption of services like C, HAT, GPT, and COPILOT surges. Enter Nebius and the concept of NeoClouds. These are cloud providers optimized specifically for AI computation. Unlike generic clouds, they focus on hardware configurations such as NVIDIA H, 100 GPUs, AMD MI, 300 accelerators, and specialized memory hierarchies that maximize throughput for model training. Renting compute from such providers is significantly faster and often cheaper than building new data centers from scratch, which can take years to permit, construct, and power. Microsoft's strategy with Nebius is multifaceted. First, it frees up internal clusters to prioritize high-margin AI services, ensuring that existing Azure infrastructure remains available for enterprise applications that cannot tolerate downtime. Second, costs associated with Nebius are treated as operating expenses, OPEX, rather than capital expenditures, CapEx. This accounting treatment allows Microsoft to retain financial flexibility, avoiding the burden of large upfront investments and depreciation costs, which is especially important in a volatile market where investor scrutiny of capital expenditure is high. In practical terms, this means that Microsoft can rapidly expand its AI capacity in response to spikes in demand, whether it's a new model launch or sudden user growth for Bing AI. Partnerships with Nebius and similar providers, including CoreWeave, Nscale, and Lambda, allow Microsoft to tap into specialized compute on demand, scaling globally with minimal friction. It also reduces risk. If a particular AI project fails to meet expectations, Microsoft isn't stuck with expensive, underutilized infrastructure. The NeoCloud approach also unlocks geographic advantages. Microsoft can deploy AI services closer to key user bases, leveraging Nebius's facilities in strategic locations to reduce latency and improve user experience. For example, Nscale's data centers in the UK and Norway are integrated into Microsoft's AI delivery network, ensuring that European users receive fast, localized AI services without requiring Microsoft to build new regional data centers. Finally, from a competitive standpoint, Microsoft is positioning itself ahead of Amazon and Google in AI adoption. The combination of outsourced NeoCloud capacity and ongoing internal builds, such as the Wisconsin 900 megawatt project, creates a dual strategy: immediate access to external compute while investing in long-term self-sufficiency. This hybrid model represents a forward-thinking approach to cloud infrastructure, balancing speed, cost, and technological control. Partnering with Nebius offers several strategic advantages beyond simple compute expansion. First, it allows Microsoft to allocate its own high-value hardware to revenue-generating workloads. By outsourcing training and low-priority computation, Microsoft can ensure that Azure AI services operate at peak efficiency, directly translating into customer satisfaction, retention, and revenue growth. Second, the OPEX versus. Capital expenditure distinction is not just a financial footnote. It is a strategic lever for investor relations. By keeping the massive investment off the balance sheet, Microsoft maintains a stronger appearance of operational efficiency. Investors, analysts, and rating agencies often favor companies that can scale quickly without tying up billions in capital projects that might not deliver immediate returns. Finally, from a competitive standpoint, Microsoft is positioning itself ahead of Amazon and Google in AI adoption. The combination of outsourced NeoCloud capacity and ongoing internal builds, such as the Wisconsin 900 megawatt project, creates a dual strategy: immediate access to external compute while investing in long-term self-sufficiency. This hybrid model represents a forward-thinking approach to cloud infrastructure, balancing speed, cost, and technological control. Partnering with Nebius offers several strategic advantages beyond simple compute expansion. First, it allows Microsoft to allocate its own high-value hardware to revenue-generating workloads. By outsourcing training and low-priority computation, Microsoft can ensure that Azure AI services operate at peak efficiency, directly translating into customer satisfaction, retention, and revenue growth. Second, the OPEX versus. Capital expenditure distinction is not just a financial footnote. It is a strategic lever for investor relations. By keeping the massive investment off the balance sheet, Microsoft maintains a stronger appearance of operational efficiency. Investors, analysts, and rating agencies often favor companies that can scale quickly without tying up billions in capital projects that might not deliver immediate returns. Third, Nebius's infrastructure allows Microsoft to deploy AI services globally at unprecedented speed. The ability to spin up clusters in strategic regions allows for real-time experimentation, testing, and deployment of new AI features. This agility is particularly important for products like GitHub Copilot and Bing AI, which are both high-profile and mission-critical. Fourth, outsourcing AI compute reduces R&D risk. Large models require not only GPUs, but also sophisticated networking, storage, and cooling solutions. Nebius's specialization mitigates the risk of operational failures or inefficient use of resources. It also ensures that Microsoft can compete on the innovation front, rolling out models faster than competitors constrained by their in-house infrastructure limits. Fifth, Nebius infrastructure is inherently scalable and modular, allowing Microsoft to experiment with different AI model architectures without overcommitting resources. This modularity is crucial as AI continues to evolve rapidly, with models increasing in complexity, size, and application diversity. The partnership essentially provides a sandbox at hyperscale, giving Microsoft a competitive edge in experimentation and production deployment. While most headlines focus on AI model training, service delivery is equally critical. Microsoft's AI products, including Copilot, Bing AI, and ChatGPT integrations, require continuous real-time inference at global scale. Nebius's compute clusters are optimized not just for training, but for low-latency model serving, enabling Microsoft to provide users with fast, reliable AI responses. By outsourcing inference workloads, Microsoft reduces pressure on internal clusters while ensuring uptime and responsiveness. For end users, this translates to fewer outages, faster response times, and a more consistent AI experience. For Microsoft, it means scaling AI services to millions of users globally without bottlenecks. Additionally, regional deployments via Nscale and CoreWeave enhance data sovereignty compliance. Some countries have strict rules requiring user data to remain local. By leveraging external NeoCloud providers in these regions, Microsoft can meet regulatory requirements without delaying service delivery. Nebius also supports specialized workloads. Mustafa Suleiman's teams and other AI research divisions have trained models at CoreWeave's Portland site, highlighting the flexibility of external providers for niche, high-performance experiments. This hybrid model allows Microsoft to combine experimental workloads with production-level AI delivery, all while maintaining cost efficiency. Finally, let's examine the competitive and long-term strategic implications. Microsoft is racing ahead in the AI cloud arms race. Outsourcing to Nebius and other NeoClouds ensures they meet immediate demand spikes, while simultaneously building their own data centers like the Wisconsin project to secure long-term capacity. This dual approach positions Microsoft well ahead of rivals such as Amazon and Google, who are also expanding AI infrastructure, but have yet to demonstrate the same hybrid flexibility. The deal also sends a signal to the market. AI compute is now strategic infrastructure, not a commodity. By securing a long-term partnership with Nebius, Microsoft ensures priority access to cutting-edge GPUs and accelerator hardware, even in periods of global chip shortages. This gives them a competitive edge in AI product deployment, R&D efficiency, and global market penetration. From an investment perspective, this partnership has direct implications for valuation, profitability, and growth. Nebius's stock surge reflects investor optimism that specialized cloud providers will continue to command premium valuations, particularly as AI adoption grows exponentially. For Microsoft, the deal demonstrates financial prudence and strategic foresight, balancing immediate operational needs with long-term infrastructure investments. Ultimately, this $19.4 billion Nebius deal exemplifies a broader trend in the AI industry. Companies are embracing hybrid cloud strategies, outsourcing specialized workloads, and investing in dual capacity models to meet explosive demand. It is a blueprint for other tech giants and signals that the AI arms race is now as much about infrastructure as it is about algorithms.